we go. The opinions and views expressed in this podcast are solely those of the Mortgage Dudes only, and not those of Equity Resources Incorporated or Greentree Mortgage Services. We're not crazy. Think of them as your slightly odd, yet occasionally hilarious uncles that are very knowledgeable about mortgages. I will say, together they have over 45 years of experience in the housing market, and that may or may not have included bourbon, beer, and cigars. They are here to enlighten and entertain, and we cannot be responsible for the language or jokes. So buckle up and be ready. Things are about to get interesting.
Wait, but fishing? It was like, oh my God, this is so boring. I could fish for like 20 hours. I'd be happy as a pig and you know what? Poop. Let's go into, we've already gone into the down payment.
Hey guys, welcome to the Mortgage Dudes. I'm Shane Marzullo, and this is my partner in crime, Ed Moloney.
Look at my shirt, guys. Look at my shirt. You can win one too.
That's right. Ed, why don't you tell them how they can win one?
How you can win one is to like us on YouTube, or where else can they like us? Or send us an email to.
Yep.
Tell me, Shane.
Spotify. You can like us on any of your podcast formats.
Or subscribe to YouTube.
By subscribing, yep. Well, you subscribe to those as well. Like Ed and I are old. We're still learning technology and verbiage. But yeah, just subscribe to those. And when you do, just shoot us an email at mortgagedudes@callequity.net. So,
and I'm getting you a shirt and maybe a picture of my head.
Oh, God. Oh, a big fat head. You get one of those big fat head photos of you?
With the farmer head hat. Yeah. Okay, let's keep on task. Right. What's our deal?
So today we're going over some good topics. We're going to go over myths. There's a lot of lending myths that we hear. Again, we always like to kind of see the Ed Moloney fishing count. We'll go a little bit over camping and golfing, what I've done here in the last month or so. We're looking into about gift funds, negatives of renting, just basically choosing a realtor. And then, and then this is kind of a good one. It's like us versus lenders, how we're different and how we're better. So let's start off with myths first. Ed, this is a good one, and many people don't know this, but you hear it because mom and dad say stuff that they've heard from their grandparents or whatever. But it says, "I can't buy a home since I filed bankruptcy."
Myth. And the number one easiest way to do a home after Chapter 7 bankruptcy or Chapter 11 for the commercial is 2 years and 1 day from the discharge. So if you know somebody that's filing a bankruptcy or has and then wasn't able to buy a house, they didn't do the steps. What are the steps then? After the bankruptcy, go get a credit card. And nobody's going to give you a credit card. You'd be surprised. But let's say the easiest way to get a credit card is a secured credit card. What is that, Ed? You put $200 into an account with the bank or establishment, and they give you a secured credit card. You use it for your gas, you pay it off, you build the credit. 2 years and 1 day from discharge, not from filing, you can get an FHA loan. Guys, the reality is the economy is tight. We've got inflation. I don't give a crap what anyone says. They got a little bit better, still high. People that are renting are paying highest rents of all time. Some of them are running up credit card debts, other things. They don't have a home where they can rent out rooms. They're in an apartment. I believe bankruptcies will be up for the non-homeowner. I'm not saying no homeowners will, but non-homeowner. We're not in 2008 again. Conventional VA, USDA have different rules, but the easiest way after a bankruptcy, 2 years and 1 day FHA. But the key is education. The day you file bankruptcy, get a hold of somebody, start building that credit. So 2 years and 1 day, you're ready. 3.5% down can all be a gift.
Yep.
Shane, I'm pushing the ball to you, baby.
To capitalize on that. So couple things when I have, filing bankruptcy is not as oh, okay, I'll just go file bankruptcy. You do have to go through stuff. And it's the biggest thing I always tell people is look at your credit. As much as I hate Credit Karma, the scores are fake. They're not real. It's Candyland, but the data is real. And that is what's important. Get the data showing what's on your credit, what's there. And yeah, it's the purple unicorn or the squid or what the hell that is. But get the data on there and I would probably do it about 6 months after discharge. See what's on there because there are some items that maybe you did file bankruptcy on that basically have become, they're still on there. They're still showing as a balance owed. And you want to dispute that with a credit bureau. Like, hey, these were filed bankruptcy on. This needs to be show as zero balance or bankrupt.
But you don't want to leave the dispute on. You want to get cleared off of the dispute part, take it off, because otherwise we have issues with that down the road.
Right. Well, yeah. But at least get that started. And Ed's right. Starting with a credit, are you going to get a regular credit card from the start? Probably not. You're going to have to do the secured one, like he said, and you use it correctly, put 1 or 2 gas fill-ups on it, stop using it, get the bill, pay it off, start the process over every month. But that's the best way to do that. Now, VA is, like he said, there are some different things. Like VA, I think, is 1 year. Now, hey, the biggest thing I will tell people, and I forgot about this, and you start talking about it, if you did include a home on that, there are some different circumstances. And I would highly suggest you reaching out to us about that because certain programs, FHA is a little more stricter when it comes to that. They're based on when the house forecloses, but conventional, if you file bankruptcy on a home and discharge, that's it. They go off the bankruptcy rule, not the foreclosure rule. So there are some variances. So I think if you have questions on this, or you're like, hey, I need to understand a little bit more, reach out to us. Mortgage dudes at callequity.net. Call Ed, call me, whatever. I mean,
774-573-0329. And, it's important. It's important.
Just, hey, Google Shane Marzullo. It's on the web everywhere.
Or Jackass Marzullo.
There you go.
One of the others there too.
You go. That's what my wife calls me. So, but all right, the next one. Should I close all my credit cards to improve my credit score? Boom, Ed.
Biggest myth in the freaking world. Definitely not. Let me dumb this down. You've got $10,000 worth of credit and you've used $2,000 of it. You go, oh, well, 2 of the cards are $4,000 limits and I don't want to get in trouble again. I'm going to shut them. Now you've got $2,000 on $2,000. You used 100% of your credit limit. What should I do, Ed? You put those credit cards in a drawer. You do not freaking use them. Ed, could they shut them down? Yeah, maybe, but unlikely. But if you close them, you limit your overall volume of credit, and then when you're using it, your usage is high. Do not close them. Biggest myth. Can't tell you how many people, it's words that come out of my mouth. If I could get a big banner like, Geico saying, do not close your credit cards, I'd have that on Cape Cod over my boat.
like a flag. Yeah, I capitalize on that. Don't close them, but what I kind of let people know is, look, if you don't use a card, if you don't have a balance on it and you don't use it, after like 90 days, it kind of just goes in an inactive status. It doesn't hurt you, but credit is built on history and multiple types of credit. So if you're closing one out, you're removing some of that history and that multiple types of credit. So it's best, like I said, throw it in a drawer, throw it in a safe. Now after you buy a home, if you're like, you know what, I don't want this card. Fine, you already own the house. You don't have to do anything. In a year later or two, your score will get better and everything else. But at this point in time, throwing it in a safe and not worrying about it is the safest thing to go. Oh, I think I had a Discover card for like 6 years. And every time they send me new ones, I just kept throwing this. I wouldn't even activate it. I'm like, you know what? I don't even care. I closed everything. But
Before
anyway,
we get to our next question,
yeah.
I've been married 27 years. That's why I was looking at my phone.
Congratulations.
My wife was texting me. How many years have you been married, Shane?
28 years, Ed. 28. I think
28.
Right? 28. When did we get married? We got married in 90.
You know what I needed, baby.
I know. We got married in 90. We got married in 95. Yeah. So
Okay.
God.
How old
March
are you,
20.
Shane?
So we 29. I am actually 54 years old.
I'm 52. That's why I'm more beautiful. How many kids do you have, Shane? 2?
I have 2 beautiful daughters and a beautiful grandson.
And how old are your daughters?
My daughters are 26 and 23.
Dementia's already set in for me. You can't even think.
I know.
So my kids are 24, local fireman, paramedic, 22, could have gone to any college she wanted, decided not to. She works at a boatyard, even though she's a horse girl. Don't even effing ask me. I have a 16-year-old named Tucker who had hair way down, cut it off, looking quite...
Did he cut his hair off?
Oh, yeah, he looks quite sly. I'll send you a picture.
Yeah.
Chickies. And the reality is he's a damn good cook. Someday we're going to bring Shane in, bring some venison. We can get some here, some fish. We're going to have Tucker cook. We're going to smoke some cigars, drink some beer. Okay, next question, baby.
Yep. Hey, so the other one is, I must have excellent credit to get a mortgage financing.
Oh, poop. So, first of all, our world has changed, the banking world. 4 years ago, godlike credit was 740 or above. It didn't matter. You were godlike. You were Superman. Now it's 780 or above. Why? Because our agencies, Fannie, Freddie, do layers and they make more money that way. The reality is somebody with a 560 or higher credit score, depending on quality of credit, it's not all just score, we have done loans with FHA, VA, not conventional. The big thing, again, not just with credit score, but with FHA and VA, you go over 50% debt to income. Conventional is right to the T. 50% stops, hard stop as of a couple of years ago. So, yes, when we pull your credit, we're going to run a credit simulator. We're going to see if we get it higher. But just because Credit Karma says you have a 540 doesn't mean you can't get a loan. Also, I don't give a poop if you have a 320 credit score. What's my words? With time and a plan, anyone can attain home ownership. Yep. I had some jackass once say to me, well, your son's 16. He can't buy a house. It's not legal. What part of time and a plan did he not get? He was stupid. Don't be stupid. If your credit sucks, pick up the phone, call us. We'll walk you through steps, time and a plan. You can attain home ownership. If you don't want it, then screw. Rent for the rest of your life. I'm on fire today.
Yeah, I think you are. I think you.
From yesterday, thank God I didn't have it today, baby. Okay, let's go. Keep it up. I'm ready to go fishing.
All right. So this one's a different one. So I must be on my job for 2 years before I can qualify for a home loan.
No. So first of all, you have to have a 2-year work history over life or schooling for a specialty in work or military. So the reality is Johnny worked for X years, took 2 years off, and got a W-2 job in non-specialty work. He is going to be a grocery store manager. Fine. He's on the job. We might need a month, depending on the loan, depending on things. We might just need an offer letter. The real history is 2 years, lifetime. Well, Ed, what about the kid that graduates college? Aha, the college counts towards the 2 years. Where's the issue, Ed? Mary wakes up one day at 19 and wants to buy a house. Well, Mary probably worked part-time in high school. Boom, 2 years. It's the misconception is I'm going to be on this job for 2 years. Now, VA has some unique rules that if it's, what they call skilled job versus not, we're not going to get into all that. But you're right, Shane. Too many people stand there and go, I was home with kids for 20 years and I just got a job and I can't buy a house. No. And I'm going to add one to this, Shane, because I'm on fire. You don't even need a freaking job. What do you mean? Child support and alimony. You can qualify if your kids, you got to make sure the child support's going to continue for 3 years and alimony. You can qualify.
Yep.
Permanent disability. You're a disabled vet. You get all disability. Well, I don't have a job. I have disability. I'm not talking short term where it's ending. No. It's got to be permanent. But, you ask a question, you get abundance of answers from farmer ed, fisherman ed, mortgage ed. But the answer is no, you don't need 2 years. It's myth. It's most people don't understand crap.
Yeah.
Okay.
I agree. I think, there's with our multiple programs, there's rules for each program. So don't just go hard and fast like, oh, I can't buy a house. No, you might be able to. You just have to talk to the right professionals. Us. So, but all right, next one. This is, I know you'll love this one. I need to have 20% down to buy a home.
I am dumbdefied how many people still believe this. It's not that people are ignorant, it's that they're not educated. It's our world that puts out misinformation. So under 20% down, sometimes you pay what is called private mortgage insurance. But let's get real, guys. USDA, mass housing up here with the grant program. Even FHA has a second program. There's a ton of 100% financing programs. Do I think they're all great? No, I love the VA program. Do I think most should try to get 3 or 3.5% down? Sure. But I'm in New England. Nobody's got 20% down as a first time buyer. We are like insane cost of living. Now, maybe in Ohio, where you can buy a house for, in certain areas for 150K, I can't even get a fishing boat for 150K a year. But that's a different story. So the answer is huge misconception. Yeah. Also, I'm on my tangent today. Where can that 3.5% come if we're not going 100% financing?
Is it a gift, Ed? Is it a gift? Is it a gift?
Yeah. It can come from Uncle
Andrew?
Shane. Uncle Shane can give it to you. It could come from selling your dirt bike. It could come from selling your cigar collection. You do need a paper trail on that, by the way.
Hush your mouth.
Cigar collection, I'd have a heart attack. But the answer is bullshit, bull crap. Oops, I'm getting in trouble again. 20% is a myth. I gave way more information. Yeah. I am going to get fired from it. Done.
Yeah. All right, next one. I can find a home I want first. Let's see, what the hell I had it right here. I can find the home I want first, and then talk to a mortgage lender about financing. Yeah, especially in this market. Totally fine.
It's stupid. Okay, so the reality is you just got to be pre-approved to know, A, what you qualify for, B, does it make sense and you can sleep at night. The way I look at the pre-approval is this, non-politically correct. It's the ticket to the dance. Doesn't mean you're bringing anyone home from the dance. It gets you in the dance. Any good realtor is not taking you out to see a house without the ticket to the dance. And as of August 17th, there's some rule, I'm not getting into it, where they're going to need buyer's contracts. So they take you to the dance anyhow. So you got to have the ticket to the dance. That's the pre-approval. You're wasting your time, the seller's time, everybody's time. Just get a pre-approval.
I think that's probably one of the best analogies ever. I love that.
I knew you would. And you went to many dances and nobody
I went to many dances and brought nothing home. Damn those dances.
You remind me of a wallflower child. You probably just sat on the wall like a flower.
Yeah. Dude, I was all hip hop. I was like all moving, come on. Yeah.
Next one, you're going to have a clip of you at the power gym doing your lifting and maybe do a little hip hop dance. Maybe Brittini can give you an outfit that you can wear and you can do a little hip hop. That's what I want for the next one. Brittini and Strunk, if you're not listening, you better be. You got to get a special outfit for Shane. He said a wearing a CrossFit.
Oh my God, that is funny. That is funny. Yeah, no, and it is surprising too. I do get people that are like, "Well, I thought you need 20% down." Like, no, not at all. It's just a myth. I mean, and it comes. I really truly think it comes from one, our parents who were buying homes back, really before FHA was out there.
30 years ago.
Yeah. Or then when we had the crash, people, everything all tightened up and everything. Oh, you need this much. So
Power Zero.
There you go. There, and now more commercials by Ed Moloney.
I have to hydrate myself. I'm a type 2 diabetic.
Yeah. So, yeah. Well, that's
Power Zero. Come sponsor us. If not, Monster's coming to kick your ass.
That's okay. All right, here's the next one. The seller will take less than they're asking for on the home and pay all my closing costs.
In different markets, Shane, yes. We're in 2010, 2011. We saw that a lot. The difference was we had more houses than people. We have more people than houses. We got three things going on with that. One, the baby boomers, they ain't dying. They're living old. The millennials, they know they're perfect. And they're big. Big generation, by the way.
Awesome generation.
54% of my business is millennial and Generation Z. And then Generation Z is coming behind it. So the answer is there is a great demand for homes. I'm not saying never. We are seeing very infrequently where sellers will pay closing costs. Not never, infrequently. So you should be prepared to go in at full price, unless that was on 45 days. Maybe your realtor knows something, maybe you can work it. There are cases where it works, but in general, let's build a plan with time and a plan. Let's look at building the assets. Maybe it is 100% financing, and then you building your closing costs. Maybe it's a loan against your 401k. Maybe it's a gift from Uncle Shane. It cannot be a loan from Uncle Shane. No, not allowed.
Shane don't loan money.
Gift. I'm sorry?
Uncle Shane don't loan money for free.
And the other big misconception is you could take the money out on your credit card. No. You could take a loan on your 401k because it's your own asset. But so the answer is we've got a lot of myths going on. This market is tight.
Yeah.
I'm not saying there aren't areas like Detroit, Michigan, or certain.
Oh, no, dude. Detroit is insane. Oh, no, seriously. Detroit's crazy, just like our market. It's insane. It's absolutely insane.
So you're saying there's no opportunities, or that they're few and far between?
I think there is some opportunities. I have had people like, okay, hey, or they're like, well, they're not paying closing costs, or paying a little bit, and then after inspections, maybe there are some things they're like, look, there's this. Just give us more money for our closing costs, and then they'll just pay it out. They'll fix it themselves. So your agent can negotiate a little bit after the contract's wrote, and once you do inspections, that is something where you can bring to the negotiation table.
Unless in Massachusetts right now, a lot of the inspections are information only. Really? So the answer is plan to have the freaking money. Yep. But there are some one-off cases. I'm going to ask you the next question.
All right.
A 15-year interest rate is always better than a 30-year rate. And is it the best option? Not just the rate, but is it the best option? Shane, the ball is with you.
No. I think right now, the 15-year rate is equal to what the 30-year rate is, if not higher. Or it will cost you more money to get it. Right now, Fannie Freddie, they just don't have an appetite for that type of loan because of the rates being where they're at. Sometimes it's not the best situation. Sometimes I've had people like, well, I want to do a 15-year, and I agree with you. But maybe your debt versus your income doesn't qualify you for that 15-year. I can tell you what the payment would be, and you can pay that every month. There's no rule saying you can't pay extra, and to wipe that out in 15 years. But in some situations, I'm like, look, instead of paying extra on the mortgage, do the 30-year, wipe out that debt that you have, those credit cards, and those other installment loans for your 4-wheeler or stupid boat or whatever you bought.
No stupid boat. Those are smart. Don't be a jackapple. You'll get hurt.
But just wipe out that debt, then focus on the mortgage. You can still say, okay, well, now that this is all done, I'm going to start lump summing payments. And so, yeah, you can definitely don't worry about like, oh, I got to go. A 15-year rate's always better. No, not in this situation. No, it's not.
So I'm going to make 2 points in the 15-year.
Yeah.
During the boom, they could be a point better, but I'm going to give you the bad, even when they were a point better. I had a lot of investors wanting 15 years, and I tried to talk them out of it. And they said, why? Because I watched in 2009 to 2013, people move back home. They were leaving those 3 and 4 family rentals left and right. They're like, okay, I'm moving back home. They had occupancy up the kazoo. So now they've got nobody renting their effing place. They've got a 15-year mortgage, and they were losing those places or scared to lose them. So the answer is cash is king, flexibility is king, unless, you're like certain people like Warren Buffett have more money than God. None of us are Warren Buffett. The next one, I love this one.
Yeah.
I should choose the lender with the lowest rate. Lowest rate doesn't always mean the lowest fees.
Yep.
Oh, we know a certain thing in the media. It goes boom and then goes boom. And they spend billions on media. I'm not saying their name because Melanie will go, and you can't say the market crash. It's not allowed.
Mortgage. I'll say their damn name. They suck. The bottom line is this. There are companies that advertise this low rate. And you're like, oh my God. Well, if you don't know everything, you're not going to see, you got to look at all the details. How much is it? Oh, that was nice. How much is it costing you for that rate? I had a client. She's like, well, I think I'm going to go with this company because the rate is lower. I go, it's $3,000 more down. I go, yeah, I can give you the same rate for $3,000 more. She's like, oh, I never realized that. I'm like, you have to read everything. You have to look at all this. So, yeah, Ed, go ahead.
And you got to do a break-even analysis. This is a Toronto Dominican cigar. Have you tried Toronto before?
I have. I've had.
I'm not a big fan. Not a big fan.
I had. They had the Bandits. I think it was one that was called a Bandit or something like that.
So they're so.
Yeah.
A grade of a C? Would you grade the Toronto C?
It's one of those. Would you say would I grade it as what?
A C. C grade. C.
Probably. Yeah. I mean, it's one of those cigars where if you're like, hey, we're with a bunch of guys, don't care if I don't smoke the whole thing. It's there. We're just sipping on bourbon, beer, gin, whatever. It's one of those things to me.
I had it sitting on my desk and I thought of you because I thought of the grade as C.
Yeah.
And by the way, A students always seem to work for B and C students, and salespeople, their managers, sometimes work for us.
Student.
I'm in trouble again, Shane. I'm going to get banned from phone calls at a company like you have been. Okay. You want to take the next one, baby?
Yeah. If the lender tells me I can afford a mortgage, then I can. Oh, shit. Go ahead, Ed.
Okay. So here's how this works. It's called debt to income. We take your gross income, W-2. If it's your self-employed, we use after write-offs, whatever. We have your income. It's before taxes. Now, we say 50% of that roughly is what you could use for fixed debts. Well, you may qualify because you've only got one car payment for $500 a month and you make 10 grand a year. But little do they know that you pay 2 grand a month in child support, not in child support, but in child care. Because in New England, child care, if you got 2 kids, it's easily 2 grand a month. Little do they know that your medicines aren't covered under your health insurance, and little do they know that you had 16 car accidents and your car insurance, I know somebody like that, or motorcycle accidents, your insurance is 5 times the normal bears. So the answer is, we're going to pre-approve you for a number. We are not the other companies. We are then going to go through and say, what are you paying in rent? Well, Ed, I'm paying $420 because my daddy loves me and his name's Shane. But you say I could afford $4 grand. I'm going to say from the mortgage standpoint, legally, here's your pre-approval. Now I'm going to say from the human standpoint, you need to sleep at night. What are you thinking? Maybe you're living in daddy's house for nothing. Why don't you save the $3,000 a month? Why can't? No kidding. You shouldn't buy that house. You should save 2 grand, put it in the bank. Now you've got your down payment after 6 months. Or you think, and more importantly, you prove to yourself you can do it. Here's the difference. Me and Shane are dads. God bless our children and wives, but we are parents. And even if our kids occasionally have called us jackasses or get off there, we care. And that's probably what makes us very good at what we do, because we care about the people we work with. Did I ever tell you my oldest first-time buyer was 73 years old and my youngest was 19? So that's another piece. Don't worry about age. Worry about timing. I am on fire today. I caught a fluke. I did what was called pre-gaming. I went to the ocean. I did some Zen. I did some meditation. I played with my pole in public. I caught a fish. I posted it on Facebook. So if you're not in front of me in chains, you'd have to follow me because I'm already full. I have 5,200 friends and I'm only allowed 500. Shane's got plenty of friends. Welcome. But I did pre-gaming. Pre-gaming gave me energy. Wow. I'm full of fire today, baby.
You are, baby. You are. So your boat. My father-in-law had a boat.
Smart man.
Yeah. Well, yep. And but now do you clean yours throughout the year in the middle of the year? Or?
So I am on a rack system that I put the boat in, they put it up on the rack and take it down. I wash it down every time, but because my boat doesn't stay in the water year round, I do not have to wash or paint the bottom. All season it's on a rack, comes down. Our problem, we've got very angry Ed lately. Ed usually between May and October gets out 10 times a month. We've had this thing called small craft advisories. What that means is if your boat's under 28 feet, they say you probably shouldn't go out. Mine's 25. Yes, Shane, I should get a bigger boat. But it means the winds have been 25 to 30 miles an hour. We had 9 of those days in June. June, I get on my boat 3 times. July, so far, 1. Keep these in mind because there'll be a farmer egg contest tied to these numbers. So the answer is I've been doing a lot of shore fishing. I've also done some charter boats where I pay a captain, 5 or 6 guys go. What's good about that is, believe it or not, occasionally I might drink on a boat. Never drink on mine. And when I drink on theirs, I can have many in a cigar. We went shark fishing last week, me, my 16-year-old, a couple guys. We only got 2 sharks. We were 35 miles offshore. It was just quiet. It's just been
what kind of shark? I mean, like
we got a blue shark and a mako. Mako, you're not allowed to keep anymore because of our government. They say that we don't have enough of them. Go in the ocean. We got enough of them, baby. But once they get something, we don't get it back. Yeah, I'm not.
I always love about that. It's like, are they counting it? 1. Oh shit, where did he go? Okay, 1, 2.
So tell me about golf season.
Yeah, golf season, camping.
Golf league. Are you golfing with your wife? Does your golf?
Oh God, no.
League? Tell me.
So Janelle's got her own league. She goes on, and I have my own league. And then generally
versus women. Like, could you join our league or?
No, God, no. Those are wonderful women. I will say they're beautiful ladies, but
here he goes.
They're beautiful ladies. I golf. We do our own thing. With Janelle and I would do like we're members of like I said, I think I've talked about, we're a little small golf club. And they call it worm ball, which is fun, where basically both of you tee off and then you alternate shots until you're completely done with the 9 holes.
What the hell does that have to do with the worm?
I don't know. I have no clue. Maybe because they saw me hit the
worm fishing. I'm like,
maybe they've seen my drive where it just runs across the grass. I don't know. But it's just, that's just what they call it. It's kind of neat. And then, camping wise, we 4th of July weekend, we spent, my brother-in-laws have campsites that they permanent trailer there, or year-long trailer there, I should say. So we go out, we hung out with them. That we had an extended weekend for the 4th of July weekend, and it was. I'll tell you what, I don't know about your fireworks, but our fireworks. I live in Perrysburg. In Perrysburg, Mommy, they split the fireworks. Because we're right next to each other, a bridge across. And they're pretty good. But Bowling Green, when I was in Bowling Green just recently, which is, it's a college town and everything, 40 minutes those fireworks went on, and they were fabulous.
But that's a different state. That's Kentucky, isn't it?
No. You're thinking of Bowling Green, Kentucky. There's a Bowling Green, Ohio. Yeah. I know. There's only one Cape Cod. So
there's only one Cape Cod, Jack.
I know.
You and Matthew D are not allowed on this continent.
I know. But so it was fun. We had a great. I enjoy those long weekends, and I'm sure other people do too. You get away. It's kind of it's like a decompression a little bit, and it's nice. Like when you go fishing, obviously.
It's so funny. We're so different. For me, a little white ball golf, it just pissed the freaking hell out of me. Brian, who does all the work on Team Moloney, is an avid golfer. I would find that thing just annoying. But fishing, People were like, oh my God, this is so boring. I could fish for like 20 hours. I'd be happy as a pig, and you know what? Poop. Let's go into, we've already gone into the down payment. Let's talk about negatives of renting.
Yeah.
I'm going to start off with one negative. Can't usually have animals. That's a big thing for people. In many places, you can't. Also, you're building no equity. Shane, you're a landlord.
I have one house left, and it's my kids, and I still don't like my tenants.
How many did you have in the day? How many did you have before?
Oh, at one point in time, I had 5.
What made you get rid of them?
People. So here's the thing, I went into these rentals with my family, wrong roof, and they're like, "Oh, I don't want to do it no more," and they bailed out. So I was stuck with everything, dealing with everything.
So as a landlord and having kids that have rented, and what is the downfall of being a renter? Give me your thoughts.
I'll tell you what the biggest thing is. You can't paint. You're counting on the landlord to fix something. If they're clearly, if it was me, I did jump in right away. But there's landlords, they'll take, like I had a client just tell me their AC was out from May until August last year. And the landlord, oh, okay, yeah, take your time, So, I mean, you're on their schedule. Most of them, they just don't care. They just want their money, and they only care if they get a really high water bill because your toilet's running all the time and you didn't report it in. So, anytime it costs them money.
One of the big things, too, is everybody says home ownership's more risky than renting, and I'm going to disagree. Because if you have home ownership, let's say you even have a 2-bedroom condo, you can rent a room out. In your lease, it says you can't sublease 98% of the lease.
Yeah.
So by having home ownership, and remember, when you're renting, you're going to need first, last, and security. So the myth that you don't need any effing money is a myth. Yeah. And you're going to need money even if you buy a house at 100% financing. You're going to need money at risk for the sellers to take it. You're going to need possibly some closing costs. So to me, here's the positives of renting. You don't have to do anything. Start your headache. Some people are meant to rent for the rest of their lives, Shane, and that's
I agree. Okay. Some people are never really fit to buy. And that's and I'm fine with that.
But that percentage is this. I think the bigger percentage is the ones that are in fear. I filed bankruptcy. I don't have any money down. Nobody likes me. I'm bald. I don't want to spend the money on Rogaine. I'd like to put the money in here. I just don't effing know what to do.
Yep.
Affordability. All I can do is rent. Blah, 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 blah. My goal, my mission, Shane's mission is to educate people with time and a plan, other than the jack that didn't understand the word time. Anybody can have a home. So my parting shot today is going to be as follows. Then we have one last topic, which is choosing your realtor. But let's start my parting shot, and that is, who do you know that you love that is renting? If you truly love them, get them in touch with us. We'll educate them. If it's Hawaii, we'll still educate them. Maybe give them a couple of names of people. We'll back off. We can't talk rates because we're not licensed in those states.
Well, and honestly, the rates are different in our states.
But we can give up all of our gifts and our knowledge. So my challenge, name it for a shirt so you can look pretty like me. Oh, by the way, Shane, the guy that won the shirt that took it to Disney, he's all the way here in Massachusetts on Cape Cod vacationing, and we're going out for some fish for lunch and maybe a beverage.
Yeah, there you go.
Or two. Yeah. Probably not this. So that's my parting shot.
Yeah.
Get the F out of fear. Come to us. I'm going to have you hit on choosing a realtor, then your parting shot. Then we go, bye-bye.
I will say, when it comes to choosing a realtor, that's a lot of times people are like, well, I just called the number. Well, here's the thing. One, this is not, if you're an agent and you're new, this is not a slam on you, but some agents are new and they're not trained properly. They're just thrown into the water and saying swim. So I think it's a disservice to you and them, unfortunately, because their broker's not educating them and helping them. You got to find somebody you're comfortable with. What you don't want is a yes man, like walking into a home and
or a yes woman. Let's not be a sexist pig.
Yeah, that's whatever. It's man as and mankind. So basically, you want to have someone that is going to basically, maybe point out some issues with the home. Maybe like, hey, you know what? This is kind of a problem. You want someone that's actually going to care and listen, but you also want someone who's educated and knows. Or if they not give you an answer like, I don't know. Well, that is a horrible response. It should be, I'm not sure. I'm going to check with my broker. I'm going to check with a higher agent. That's something that they check on. Go ahead, Ed.
But the big thing is, it's not just the new agents. There are plenty of agents that have been doing this 30 years that suck.
Oh, yeah.
There's plenty of more.
You can do it for 30 years, but doing it wrong for 30 years. So,
I'm sorry?
I said you can be doing it for 30 years, but doing it wrong for 30 years.
So I agree with Shane. I think you interview a couple of realtors, you remember you're going to spend more time with them than probably your spouse or significant other. You're going to be seeing others. You want to ask, are they full-time? What is different about them? Ask them that. If you're a first-time buyer, ask them for examples of how they've impacted other first-time buyers. You're going to get a feel for how this works. Shane, I got to get ready to eat, drink, fish. What's your parting shot, baby?
All right. My parting shot. Ready? The internet sucks. Don't believe everything. The internet. So I saw some publication about the average closing time is like 59 days. I'm like, what? So I started going into it, and they were saying, well, to more detail, it was like, well, from the time you start thinking about buying a home to you close. Well, I'm like, well, those times are way off because I have people take 3 or 4 months. And then I was reading for, and they're like, you should talk to multiple lenders and get multiple things. Okay. No, because multiple lenders, you start getting people who just start telling you what you want to hear. Again, it's about trusting your professional. If we have no trust, if you don't trust me, then we can't work together, because I'm going to do what's best for you. But if you don't believe me, then nothing I ever say is going to be worth working with. So just, if that's the case, move on. I'm completely fine with it, but you have to have trust that we're doing what's in your best interest, and a lot of people when they look online, they don't know what costs are truly involved. They don't know how do they do tax prorations. You deal with some idiot in California, that loan officer that's like, oh yeah, I'm licensed in every state. Okay, well, here's the thing. What I don't know is I don't know how Ed's tax prorations work. I don't know what all those rules are. So if I'm licensed in Ed's state, I probably should be educated. And a lot of these guys just throw out flat numbers and don't bother giving you and all of a sudden you're like, well, wait a minute. Now you start going with them and like, why is my numbers $4,000 more? Well, I didn't know that they're going to charge this, this, and this. Really? Because it's right there. It's common. So
that brings on Sparkle. I have one last parting shot.
Yeah.
The person that sends an email to mortgagedudes@callequity.net or text me at 774-573-0329 with their full name and gives us a great question for next time, I won't send you one shirt. I'll send you 2. One for you and one for your significant other, or if you don't have a significant other, you can go to the bar and give it to one.
Yeah, that's how you can attract. That's how you attract them. Hey, I got to do mortgage dude.
Pleasure, my friend.
You too, buddy. Hey, everybody, thank you. Subscribe. It's not that hard. It's free. It's free. Push the button. Boop. There you go. Then you know when you get called.
Tom Brzezinski, remember, you're an expense report first for a trip. Bye-bye.